Interest rates rose pretty quickly these past 2 weeks. So did that have an impact on the market? That's what we're going to be covering in this week's report. As always, thanks for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's findings. So new listings first for the 4 counties we track. You can see new listings saw a jump this week, which was great to see. Still tracking last year's trend almost perfectly, off again by exactly 10%. So 5 weeks in a row, about 10% has been the number. So is that kind of a foreshadow of 2023 will be about 10% off in inventory? It looks like it's a trend, but we're going to see as we move into kind of the heart of the spring here. Let's go over and look at under contract activity. This is where it got a little interesting this past week because we actually had a tick down from last week. And each year we start to see some really big acceleration in contract activity in these upcoming weeks here as we hit late February, early March. So that will be the big test for this year, especially with a little bit of uptick in inventory that we saw last week. Are the buyers going to soak up that new inventory here in the upcoming weeks? Now let's go and look at nationally at home sales trends. We saw the newly pending fell by 6%. So a little steam came off the market this past week. And it's probably safe to assume that interest rates rising had a bit to do with it. It seemed like when rates settled in this past month around 6%, buyers had kind of accepted that as the new reality. But last year in the fall, when we peaked over 7%, that's really when we saw a slowdown. So we'll see, but maybe that 7% interest rate kind of is a magic threshold for buyers. Let's look at showing activity because this graph gives us a great forward-looking indicator of where the market's likely going to go, because those are active buyers that are out in the marketplace and will likely turn into contracts in the upcoming weeks and months. You can see showing activity stayed pretty much on track with last year, which was we got our first look at this last week, and it was a pleasant surprise to see that. And so even though we did see a dip in contract activity, possibly because of those quickly climbing interest rates, the showing activity remains very strong. So one inference we can make is that there is still a lot of potential buyers out there, but maybe they resisted in pulling the trigger on homes a bit during this latest rise in rates these past few weeks. Total off-market activity represents those active listings that came off the market without a successful sale. You saw just a slight uptick here, but still nothing major to report here yet. Under contract versus new listings. So this and the next chart are going to give us an overall feel for balance. You had that uptick in new listings and kind of a flat contract activity week over week. So this metric fell a bit. And then here, to get a full snapshot of the market, we add in those off-market activity. And you can see same here with the slight uptick in off-market activity. The dip was just a little bit more gradual than it was on that last chart. So to recap, interest rates rising sharply may have put a little bit of a rein on contracts, but the buyers are certainly still out there. So we'll see what they do in the upcoming weeks. And that will be a really, really big tell for how the rest of 2023 plays out for our local market. So as always, thanks for joining us, and we'll see you here again next week for some real-time market insights.